Hey guys, Alessio here. Hope you're well. In this video, I want to talk to you about the chart of the stock markets. So the stock market just recently had a drop. We had a decline in the markets in the S&P. And I want to explain to you what this potentially could mean about the markets. All right, guys, join me. Hey guys, welcome back. Speaking today, as you can see, from Istanbul in Turkey. Great to be here. And by the way, freezing cold as I'm making this video. By the way, I haven't been to Turkey, Istanbul, since I was a small child. It's good to be back here and going some really beautiful spots here. Anyway, guys, let's talk about the stock markets. The stock market just recently hit a high to 7,000. As a matter of fact, one of the things that happened was the money managers' sentiment, in other words, the greed and fear among money managers, as shown here, reached a very high level, showing a high amount of greed. So that was the level where we saw greed or optimism in the sentiment. So I want to keep this video short and sweet. Guys, put it this way. The stock market has an important support level at about 65.50, as you can see here. That's a floor for the S&P at the November-October lows. Okay. Now, if the stock market were to drop below that level in a sustained way, now, again, I'm not saying that's what's going to happen. I'm saying it's an if. And again, we're speculating here, but if the stock market were able to succeed and break in a sustained way below 65.50, the October-November lows, that would significantly increase the probability that the stock market may indeed have topped. Okay. Now, when I say break in a sustained way, what I simply mean is as long as the break is not a false break or a whipsaw, because sometimes, again, markets break support levels, they break the key level, but then they quickly recover and go back above it again. That's what's called a false break. So in other words, as long as the stock market, the S&P, can break that support level near 65.50, the October-November lows, again, as mentioned, in a sustained way, then that would increase the probability that we may indeed have seen a top, at least an intermediate top for the next several weeks and months on the stock market. Now, it could also be a long-term top, but at the moment, I rather doubt that. Personally, for most of 2026, I'm going to remain cautiously bullish and optimistic. There are some data that suggests that the markets could still remain strong for the next several months, but that depends on whether the market can stay above that key support level, again, 65.50. So again, I'm still leaning towards the markets, the S&P, breaking above 7,000 in the next several months of this year. Although it does seem at the moment we're seeing a pullback or a correction. I think it's a temporary correction or pullback. So I would say watch that level, the October-November lows, closely. Keep an eye on that, because if the market were to suddenly break that level, that would probably increase downside risk significantly for the stock market. So that is indeed a very critical, important level for the S&P. Anyway, guys, I'm going to cover Bitcoin, stock markets, and gold in more detail in a member video. Make sure you check that out. And by the way, guys, this Sunday is the last day you can become a member for $1 for 30 days. So make sure you check that out before the offer expires. All right, guys, that's what I got here from Istanbul in Turkey. Thank you very much indeed. See you guys in the next video update.